Another year, another tax season. I know, it's that time of the year again. So in this updated video, I'm gonna show you exactly how to maximize your tax release for assessment year 2023 so that you can save that extra money for yourself. Just in case some of you have no idea how income tax works, I'm gonna talk about it briefly here. So feel free to skip to the tax relief section if you have been filing taxes for years already. So first thing first, what is considered income? You probably know the ang pao you got during Chinese New Year is not considered taxable income. But then, does your overtime count? Or your annual bonus? Or what about the allowance that your boss gave you? Well, according to our tax authority, LHDN Malaysia, under option B, gains or profit from employment. Basically, most of the things that you receive from your employer is taxable, and that employment income includes salary, bonus, overtime payment, commission, or some of you might even have employee share option scheme, ESOS, and of course, certain stuff are not taxables, like your medical claims and allowance for parking and meals, because you already claim from your company, right? And there are also other types of income. For example, rental income, if you are renting out, say, your house or your condo, or dividends and interest income if you invest in interest-bearing assets like bonds, or you receive periodic directors' fees or interest from your company. Those are all taxable income. But for today's video, let's just focus on profit from employment since it's the most common one here for all of you. If you are interested to learn more about investment-related taxes, you can watch my video here about how are Malaysians taxed for buying US stocks later on. So coming back, immediately the next thing we think about is, according to your current income, do you need to start paying tax already? Well, the fact is, if you earn a salary from a company and you have an annual employment income of more than 34,000 ringgit annually, or about 2,833 ringgit monthly, then your employer will be required to enroll you under the Potongan Cukai Bulanan (PCB) scheme, where tax is automatically deducted directly from your monthly salary as a form of prepaid tax. So if you fall under this category, which is most of us, you will need to file for income tax. If you're still not sure whether you have this PCB in place, just check your monthly salary slip, or ask your HR department and they will definitely know about that. And for some people, even if you earn more than 34,000 ringgit a year and you are enrolled under the PCB scheme, that does not necessarily mean you owe that full amount in tax. And that's because you will still need to find out your chargeable income using this simplified formula, where chargeable income equals to total gross annual income after EPF deduction minus tax exemption and minus tax reliefs. Tax exemptions are income types that you don't have to pay tax for. For example, your medical and dental benefits, parking allowance, traveling allowances, etc. And they are usually displayed in a separate section in your EA form provided by your employer in the F field as shown over here. And as for tax reliefs, they are money deductions that allow you to reduce your chargeable income, like buying books, sport equipment, medical expenses, insurance, etc. etc. And this is exactly what we can work on in this video to minimize our tax payment. We'll get back on that later on. Now, take for example a gross monthly salary of 3,200 ringgit. After deducting your EPF contribution, your net salary might be around 2,850 ringgit per month. So annually, times 12, this adds up to approximately 34,200 ringgit. However, this is not your chargeable income for tax purposes, because after considering all eligible deductions and tax reliefs, your chargeable income will most likely fall below the 34,000 ringgit threshold, and this could mean that despite the PCB deductions throughout the year, you may not owe any additional tax to LHDN. In fact, you might be entitled to a tax refund, so you definitely want to follow the rest of this video closely to save more of your money. Quick pause, this video was made possible thanks to Momo Malaysia, and they have just recently launched a digital brokerage app here in Malaysia. If you're looking to grow your money with a SC Malaysia licensed broker, look no further. Momo Malaysia has one of the best and the cheapest package here in Malaysia for you to do so. only $1 per trade for the US stocks and ETFs, and only 3 ringgit per order for any stocks in Bursa Malaysia. Their investing app is literally made to supercharge your wealth because you now have the global stock market right at your fingertips. On top of amazing features like economic calendar and also my favorite live news feature to help you get up to date with all the happenings in the world economy right now. Feel free to use my referral link down below to get up to 1,000 ringgit worth of rewards guaranteed when you deposit money into your account. Quickly, because their current promo ends on the 31st March 2024 and they may change it after that. Alright, let's get back into the video. Okay, Ziet, just tell me how much tax I need to pay. Well, very good question I must say, and you're about to hear it. To answer this, you'll need to first look at the updated tax rate for YA 2023 provided by LHDN, and as compared to last year, they lifted some pressure for people earning below 100,000 ringgit annually and imposed more tax on people earning more than that with the same cap of 30% annually. Still remember that chargeable income of yours? Now, it's time to use it. The table looks complicated, but trust me, it's actually very simple. Say your chargeable income is 55,000 ringgit after you have deducted all the tax reliefs possible. Now, with a quick search and you will notice it falls within category E. So for the first 50,000 ringgit, you're gonna pay about 1,500 ringgit in tax. So 55k minus 50k, you're left with an extra 5,000 ringgit to be taxed, right? Now, check again. It said that for the next 20,000 ringgit, the tax rate stands at 11%. What we're gonna do here is just times your 5,000 ringgit with the 11% and you end up with 550 ringgit. So there you have it, 1.5k plus 550 ringgit, that totals up to about 2,050 ringgit. And this is how much you need to pay for the assessment year of 2023. So as your salary increases, the tax rate imposed on you tends to increase as well. So they say, with greater power
comes great responsibility.
But it might be more than what you're happy to pay. So always look at ways to reduce the chargeable income as much as possible within the legal limit. Don't worry if all of this sounds too complicated to you, because they actually are, especially for starters. Myself included, not gonna lie. Whatever I'm sharing with you here are just theories to help you understand how it works. Realistically, you can actually leave all of these calculations to the LHDN system to compute the final taxable amount for you, or even try those online tax calculators for Malaysians yourself. There are tons of them out there. Now, this part is where you can take full advantage to save yourself from paying too much tax. So here we begin. I'll go through all the possible individual tax reliefs one by one. There's about 21 in total from the official LHDN website. But of course, I know, to save you extra time, I have further split them into 3 main categories. 1. The general category, where it's claimable for yourself, your spouse, your kids, or your parents. And then the second parents category for any related expenses if you are taking care of them. And of course, lastly and thirdly, the child category if you have any. So feel free to skip around to whichever section that applies to you. Let's first look at the tax relief you can claim in general. The first one is individual and dependent relatives. Individual refers to you yourself, whereas dependent are people who depend on you for money or daily expenses. Realistically, people like your children or your parents. Relief of 9,000 ringgit for you and your dependent relatives is granted automatically. All you need to do is fill up the LHDN e-filing form, and some of you might even notice that this field will be instantly grayed out, so no action is needed on your end. Very easy. Next, if you are a disabled person registered under JKM, sorry to hear that, you are eligible for an extra deduction of 6,000 ringgit, which can hopefully cover some of your daily expenses, necessary assistive equipment, care and therapies, and all you need is to present your OKU certificate. And if it's not you but you have a disabled, say husband or wife, there is also a tax relief of up to 5,000 ringgit. Hey guys, sorry, just a quick insert because I missed out number 5, which is the education fees for yourself. So if you are also studying beside working, you might be rewarded for a tax relief for up to 7,000 ringgit for your own tertiary or postgraduate education fees. As for undergraduate courses, only these courses are qualified for tax relief. However, if you plan to pursue a master or doctorate degree, any courses of study are eligible for tax reliefs. So you can refer to the list of recognized local institutions in Malaysia at the official portal of the Ministry of Higher Education Malaysia, MOHE. And also for any courses of study taken for the purpose of upskilling yourself or self-enhancement, the claimable amount is capped at 2,000 ringgit. But do know that these courses cannot be from just anywhere lah. It has to be recognized under the National Skill Development Act 2006. So you can check out the full list over here. Okay, back to the video. Next in line, you have the medical expenses of yourself, your spouse or your child, and it has just increased the maximum claims from 8,000 ringgit to now 10,000 ringgit for this category. The tax relief includes serious illness, fertility treatment and vaccination, but it's capped at 1,000 ringgit only, and full medical checkup including mental health checkup or consultation. COVID-19 detection tests including buying the self-test kit also limited to 1,000 ringgit. And do note that all medical expenses can be made by you, your spouse or your children, except for the fertility check lah, which is only for you and your spouse lah. Pretty obvious, right? And starting this year, children with learning disabilities are also included to ease the burden of parents. The income tax relief for medical treatment now includes autism, attention deficit hyperactivity disorder, ADHD, global developmental delay, GDD, intellectual disability, Down syndrome and specific learning disabilities. Quite a long name. Anyways, claims up to 4,000 ringgit can be made, but altogether it should not exceed the total 10,000 ringgit claims. You can pause this video and read the criteria needed for the claims over here. Now let's move on to my favorite one, lifestyle purchases. Also the category we all guiltily spend a lot on. You can claim up to 2,500 ringgit for personal use by yourself, your spouse or your children, which include items like any reading materials such as books, journals, magazines, printed newspapers. Of course, not banned reading materials like you know what lah. And you say you haven't read a word since 1996? That's okay. If you are paying for any internet bills that are under your own name, that one is also claimable. The best part? Laptop, smartphone or tablets like iPads are also eligible for this tax relief. And it's also worth noting that the 2,500 ringgit also includes sport equipment and gym membership. But I recommend you to claim everything else before this one, because sport equipment is actually claimable under the next category, which we'll talk about it now. To be honest, I'm not sure if this has anything to do with our country's high obesity rates or whatnot. Sports equipment and activities are somehow eligible for tax relief under two different categories, so it's up to you how you want to play with it to minimize your tax payment. And under this lifestyle category, you can claim up to 500 ringgit for any purchase of sports equipment, rental or entrance fees to any sports facility. And I can imagine it will be access to gym, badminton court, yoga class or something equivalent. And if you work out regularly and you take part in any sports competition like marathons and whatnot, the registration fees are also claimable. And also, other than owning it yourself, you can also claim it on behalf of your spouse and also your kids. So think really hard and make good use of this tax relief. And some of you might wonder, is it really for every sport? Well, apparently, the activity has to be defined as sports activity under the Sports Development Act 1997. I've checked it out for you. It includes about 50 sports activities over here, and sadly, I announce e-sport is not one of them. And some other things that are not eligible for this tax relief are like jerseys, sports shoes, pants and swimsuits, since they are considered as sport attire, not equipment. The next relief is very relevant for stay-at-home wives or husbands, and this 4,000 ringgit spouse and alimony relief is only applicable if your spouse has no other source of income, or if he or she opts for a joint assessment in your name. And one important notice is that if your spouse somehow has a gross income of more than 4,000 ringgit coming outside of Malaysia, you are not eligible to claim for this tax relief. For divorced couples, Not judging at all, if you are paying alimony to your ex-wife, you will be able to claim up to 4,000 ringgit. But Ziet, can I claim 4,000 ringgit for my ex-wife and then another 4,000 ringgit for my current wife? Sorry bro, you can't do that. The maximum claimable amount is capped at 4,000 ringgit only. And also, do note that you need a written agreement to prove that you are paying the alimony. Cannot be just say only lah basically. Next is life insurance and EPF, and this is an easy claim up to 7,000 ringgit that you should not miss. If you are contributing to EPF already, no matter if it's the mandatory contribution or you voluntarily put in it, you can claim up to 4,000 ringgit. If you are not sure, you can get this number on your EA form provided by your employer, usually after March, and it should be found under this row. And how do you claim the remaining 3,000 ringgit? It can be done in two ways. If you are paying a life insurance premium or a takaful contribution for yourself and your spouse, that is one way. Or, since the government is encouraging you to pump some extra money into EPF, starting from this year, you can also claim the remaining 3,000 ringgit by funding voluntarily into your EPF. But it has to be additional contributions lah. And if you plan to claim via life insurance, you can always check your insurance plan. And I will use this insurance statement as an example. You can see under the benefit type life, the premium paid is 106 ringgit and 80 cents. So that will be my claimable amount. Or in this case, find your number. And next, you can also claim up to 3,000 ringgit if you have made contributions in any deferred annuity schemes or the PRS private retirement scheme approved by the Securities Commission up until year assessment 2025. What is deferred annuity, right? Basically, it's something like a life insurance plan designed by an insurance company to sort out your retirement by offering fixed income from a future date chosen by you. And these companies will then invest the money for you and guarantee a stream of income to you after certain years. Basically, something like an investment-linked accounts. Personally, I'm not a fan of having people invest for me simply because of their exorbitant fees. If you also want to start investing yourself, well, I have tons and tons of videos in my channel, so just open a playlist and start watching. I can almost guarantee you will build more wealth if you learn how to manage it yourself. It's not that hard, But back to the topic, if you do have one, it's claimable. Another option is claim via holding PRS, which is an investment plan issued by asset management companies, where a contribution is similar to the typical unit trust cash investment. And after contribution, your money will be separated into two accounts, sub-account A 70% and sub-account B 30%. And there are currently 9 available PRS providers such as Affin Hwang Asset Management Berhad, AIA Pension and Asset Management Sdn Berhad, and more in this list over here. Again, if you ask me, I don't really like PRS as an investment or savings vehicle because their historical returns are pretty subpar, to the point you might even lose out to inflation. It's that bad, even after accounting for the savings from the tax relief. So in my opinion, it's not really worth it. You might as well just park into fixed deposits, which gives you better return while not locking up your money until retirement. Provided you don't go and withdraw and spend it all lah, That's a caveat. Now we look at education and medical insurance. It's claimable for up to 3,000 ringgit if you have purchased any insurance for education or medical benefits for yourself, your spouse, or your children, which again, you can get the figures from your annual insurance statement. So in this case, I can claim 2,627 ringgit 70 cents out of the 3,000 ringgit based on my statement above. And for working adults, another easy claim is the contributions to the Social Security Organization, SOCSO, and the claimable amount is up to 350 ringgit. Technically, it should also include contributions made by employees through the Employment Insurance System, EIS. And again, you can find this number under your EA form provided by your employer. The next relief is made specifically to the EV drivers out there, be it for brands like Tesla, BYD, BMW, Mercedes, etc. And the expenses on charging facilities, including purchasing, installing and renting EV charging equipment or subscribing to one, are all claimable up to 2,500 ringgit. And this next relief applies to you if you are buying basic supporting equipment to aid disability, and you can buy it for yourself, your spouse, your children, and even your parents. And under this tax relief, you can claim up to 6,000 ringgit as long as the individual is disabled and registered with the Department of Social Welfare Malaysia, DSW, or Jabatan Kebajikan Masyarakat, JKM, like I said earlier. And some of the basic supporting equipment includes a hemodialysis machine, wheelchair, artificial leg, and hearing aids. And since you have mentioned parents, the following tax relief category is all about taking care of them. So the one and the only tax relief for parents is the medical treatment, special needs, or carer expenses. For these expenses, you are able to get a tax relief of up to 8,000 ringgit just to take some burden off, right? And we all know the piling medical bill is no joke. But do note that the medical condition of your parents must be certified by a medical practitioner registered with the Malaysia Medical Council, MMC. And also, your parents must reside here and have their ongoing treatment done in Malaysia. And providing the condition remain unchanged from last year, the expenses that qualify for tax relief include medical care and treatment provided by a nursing home, and dental treatment such as tooth extraction, filling, scaling, and cleaning, but excluding any cosmetic dental treatment expenses such as teeth restoration and replacement, which involves crowning, root canal, and also dentures. Now, if you also happen to have kids, you are able to file for tax relief too for having these little troublemakers in your life. Now, look at your kids and do some math and count just how many children you have in your house. Must of course be unmarried ones lah. And for every child under the age of 18 years old, you can get a tax relief of 2,000 ringgit each. Finally, having children pays off, right? And before you ask, if you have filed for this relief, your partner cannot file for it again lah. As for those children who have grown up, it's even better. For every child of yours that are aged 18 years and above taking up diploma, degree, master's, or doctorate courses in colleges or universities recognized by the Ministry of Higher Education, MOHE, you get to claim 8,000 ringgit for each of them. And for your above 18 kids attending pre-university courses like matriculation, matrics, A-levels, foundation, etc., the tax relief caps at 2,000 ringgit instead. And also, a tax relief of 6,000 ringgit is eligible for every child who is physically or mentally disabled, no matter their age, and the children must of course be certified by JKM as a disabled person. An additional exemption of 8,000 ringgit is also applicable for an unmarried disabled child receiving a full-time education here in Malaysia or overseas, diploma or above if in Malaysia, and degree or above if they are sent overseas. Now, if you are a mom who is breastfeeding a child aged 2 years and below, I hope you are well rested, you can claim up to 1,000 ringgit in reliefs if you have purchased any personal breastfeeding equipment. And this deduction can only be made once every 2 years of assessment, meaning if you are submitting for assessment year 2023 now, then the next round of submission will be for 2025 instead. Next up, if you have kids under 6 years of age and you do send them to daycare centers or kindergartens, there's a tax relief for you that can go up to 3,000 ringgit. But as usual, this can be claimed by either the child's mother or father only. Also, regardless of 1 kid, 2 kids, or 3 kids, the maximum is still 3,000 ringgit only. And of course, there's tax relief for SSPN as well. In case you didn't know, SSPN, or it stands for Scheme Simpanan Pendidikan Nasional, is a savings plan that encourages parents to invest in their children's higher education. So if you are a parent who makes deposits into the SSPN account, you are eligible for a relief up to 8,000 ringgit, but it has to be net deposits in the year 2023 of course. Doesn't count if you withdraw and deposit again. So all said and done, I hope you get a clearer picture of what you can and cannot claim. And if it helps, a little like and subscribe will help us go a long way for this channel. And do remember to share this video with your friends and family. And who knows, you could be helping them to save some money from paying too much tax. As a general rule of thumb, always keep all your receipts, proofs, or certificates in case you are audited for whatever reason. Some experts even suggest keeping for up to 7 years worth of those just in case. The usual disclaimer applies. I'm not a certified tax accountant or financial advisor, so please seek professional advice where necessary. I'm just here to share with you whatever I know regarding all this tax stuff. So that's all I have for you right now. If you are interested in growing your money in the world's fastest growing economy, the United States, while doing it safely with a well-regulated and reputable broker, you will not be disappointed with this video. See you over there.